In this video, I'm going to show you some tips on selling put options. You're probably already selling put options, especially if you're looking to retire with option trading. Selling put options is one of the most basic strategies. But what are some tips and how to actually make more premium from selling put options? Well, let's go over some examples of things that I look for. Let's first of all go to an example on Robinhood. So I'm going to be using Robinhood as a stock, and one of the biggest reasons that I want to use this stock is because it has a lot of volatility, which comes into tip number one. If you want to make a lot of money selling put options and basically collect premium to retire, well, you want to sell put options that have higher implied volatility. So I have selected here the expiration date of November 21st. I like monthly options. I think they're the simplest form of generating safe passive income because they're not too much work to manage. And that's pretty much tip number two, but we'll get into tip 2, 3, 4, and 5 a little bit later. So let's go over tip number 1, implied volatility. So implied volatility is really your friend, especially when it comes to selling put options. So right here, tip number 1 is implied volatility. So the implied volatility here is 76, and anything over 40 is pretty good. So that's a really good indicator here that this option is going to be pretty expensive. And an expensive option is a good thing, especially if you're selling options. Now, of course, the expiration right here, November 21st, is a monthly expiration, and it doesn't really take that much management because when you sell a put option, you're happy to buy the stock. And that's really important point as well. You want to know that you want to buy the stock, and the worst that would happen is you would have to own a stock that you would already want anyways. So with implied volatility, very important because it increases the premium, and the stock selection is also super important because you want to be able to buy the shares and not really have to regret it and say, hey, that's fine. I got to buy the stock for cheaper than the current trading price of $139. I got to buy it for $135. Now, you can do the math right here. So it's about $800, and the premium that or the capital that you're putting up is $12,000. So the return here is about 7.5% or so. I'm just doing some back of the envelope math. But 7.5% in 26 days is an absolutely massive return to make. And the whole reason that this is such a massive return is because the implied volatility is so high. Next thing that you really want to look out for, and one of the best tips for selling put options, is simply just having enough volume. When a stock doesn't have any volume at all, well, that's not good because you're not going to get filled for a good price, or you might not be able to get filled at all. You're basically going to get ripped off, and that's because when there's no volume, that means there's no one trading it. And when there's no one trading it, you get a bad price because there's not enough liquidity. So liquidity is a very important factor. You can also look at open interest. So here we have about 3,600 contracts that are open. And open interest is essentially like how many contracts have been traded so far in the total history of this option that's expiring on this specific date. So here, when I'm looking at selling a put option, the 135 is pretty perfect, especially if I want to purchase Robinhood for $135. You can also see on the technical chart, here's another tip for you, is if you want to buy a stock, you should really look at the moving average. The moving average is 123, but the interesting part is that Robinhood right now has had a pullback. It has pulled back from about $151 per share down to $126, and it has had a really big bounce. So when I'm looking at selling a put option, the 135 here would be an aggressive entry point basically. Right here, you can see that we have had some good momentum and likely Robinhood will keep going up. However, another tip is if you want more like safe entry and you're kind of like afraid of getting assigned, well, of course you should go more out of the money. And right here, you can see that we have a pretty good support, right? A really strong bounce. This bounce is occurring at 127. So of course you can go down and pick something that is a lot lower, such as 127. The premium here is actually still pretty good, where you're making $500 on $12,000 worth of capital. Now keep in mind, this is not an actual loss. I know a lot of beginners get really afraid and they say, wow, I'm gonna like risk all this money to just basically make 500 bucks. Well, no, not really, because when you sell a put option, you're just saying that you're happy to buy 100 shares, and this is not the actual amount that you can lose. This is really only the amount that you can lose if the stock were to go to zero. But ask yourself, is a big company like Robinhood likely to go to zero? Well, the chances are pretty slim to none. All right, let's talk about a tip on managing a put option. And the best tip for managing a put option is once you have sold it, you should commit. I am a big fan of commitment. So if you've sold a put option, you should have done your research ahead of time that you like the stock and basically commit. You no longer have to really manage the put option that much. The only thing that you can really do is close it out in case it goes against you completely and you change your mind. However, you shouldn't really be changing your mind on a stock that you sell a put on, because you should only be doing so on high quality companies. Now, what I want to do is I want to show you some of the positions that I'm selling puts on so you can get a sense of some of the returns that I'm getting as well as some of the stocks that I'm picking. I currently have an American Airlines put that I have sold for $11 per share. I'm oftentimes talking about American Airlines, and part of the Retirement Academy, me as well as other coaches, we will discuss the best stocks. And American Airlines continues to be a stock that we all like, essentially because the stock has tremendous support. For a very long time, the stock has not really breached below certain levels, which makes it very predictable for selling put options. ACHR is another stock that I have sold puts on, and as you can see, I'm currently down. However, that's not a concern, because if I like the stock anyways, I'm happy to purchase it. Then I'm just going to hold on to the position. Another stock here, which is HIMS. I'm planning to make a video on HIMS very soon on why I think it's a good investment to make, as well as some option trades and strategies on it. You can see here that I am essentially selling puts. And also, one more tip about selling puts is that you should have a strategy for when you do get assigned. That strategy is called the wheel strategy, and I have a video on it. It's a wheel strategy on SoFi stock. But essentially, you can think far into the future and say, hey, when I get assigned, I want to continue to generate income on selling puts. So selling puts, as long as you master it, it's not that hard. You can make really, really good money and basically achieve retirement just through selling puts alone. I've had basically thousands of students I've coached in my entire life, and basically the best strategy is selling puts because it allows you to acquire stocks for cheaper than the current price. So it's literally better than just buying stocks outright from a risk management perspective. It literally is cheaper than buying the stock. The only downside of basically selling put options is in a really big bull market, you won't get assigned. The last tip I want to talk about is going to be using the Bollinger Band for basically picking the right strike price to sell a put option. So I'm going to go to the chart here on SoFi. SoFi is up a lot. And one of the things is you don't really want to sell put options when a stock continues to go up. It has very high momentum. And that's basically because when a stock has really high momentum, essentially you will miss the boat on some of the profits if it continues to go up. Or if the stock ends up coming down and having a pullback, then you will get assigned very quickly on selling a put option. From one perspective, that's completely okay if you want to get assigned. But from the other perspective, for example, if you were to sell a put on SoFi, well, you would want to go down to where the stock has some decent support. Based on the technical chart, that would be right here at $26 per share, and again here at $26.60 per share. So you simply want to look for visual cues where you can sell a put option where the stock seems to be very bouncy. I don't know if that's a technical term or not, but I'm going to use the word bouncy. So if a stock completely bounces, that means there's a lot of support for the stock and a lot of investors are purchasing at those levels. Clearly, for SoFi, it has had many bounces. It's currently in a bull trend. If you want to be extremely, extremely safe, then the last tip I have for you is sell put options at the bottom of the Bollinger Band. As you can see here, it's pretty unlikely for SoFi to go below the Bollinger Band. You can make the safest income by going at these levels around $25 per share. If you appreciate me making videos on this type of tutorial style content where I give you tips and I don't care about the YouTube algorithm, well, prove it. Like the video, subscribe, and that's all I really need. Thanks a lot, and I'll catch you in the next one.